What's up, everyone? Pretty much back with another one. The classic, always winning. You know how it goes. Haven't been trading for a while, but we've been back this weekend, pretty much murdering the markets, really. So today's trade recap is going to teach you guys a few main things, and one is just noticing how market can draw and pretty much tend to just continue in a pre-established direction. So we can clearly tell that the daily time frame is bearish, right? As you can tell, the structure is bearish. But now some would say you need to take into account weekly structure at areas of liquidity, like this right here. This is a weekly area of liquidity. If you can't tell, let me just zoom in a little bit. This right here. So yes, we may have a reaction. So we need to keep that in mind, which is why I'm going to explain how I traded today. So we also know that the 4-hour time frame, right, is bearish coming into market open. We can see that we had a 4-hour impulse down and that we are pretty much retracing at market open. What does that mean? Daily time frame is bearish, 4-hour time frame is bearish, but we also take note that we're at a high time frame area of liquidity. So we scale down a little bit more to see what's going on. What can we tell? We can tell that by market open, hourly structure had shifted bullish. So we don't just go short. What do we have to do? We have to see if price has been priced efficiently, or at least has gone to equilibrium, which it has here, as you can tell, above the 50, right? On top of that, what else do we need? We need the low time frame to validate our structure, right? And what does that mean for us? How do we invalidate 15-minute structure? By what? Validating what's it called, 5-minute structure. Now, yes, some could say I traded this early, blah, blah, but there's also the 30-minute session strategy that was being used here. So I'll say this, there are two entry models that you could have used. I'm going to show my first one, and then the second entry model that I would have used had I missed this move on the first move. On this leg, you could have entered here, and you could have entered here. So this is where we entered, though. So essentially, what you have here is a 15-minute bullish structure. The hourly genuinely looked like a doji, I believe, when I entered into it. No, the hourly is pretty bullish. Yeah. So really, what's going through my mind here is that the 30-minute structure right here had pretty much closed here, and we took out the London high that had just been made. And 15 minutes was bullish, right? So I'm taking that into account when I'm taking this trade. So what am I doing here? I noticed that we get a sort of 5-minute shift in structure here, where people would have likely entered already, right? Because sometimes people think that these dojis are actually candles with bodies and mistake them and go short automatically. But no, 5-minute fake structure. This becomes a fake break of structure, right? And then we have a liquidity sweep here, followed by internal 1-minute invalidations of that very structure that was just made here. How can we tell that? Very simple. Bullish order block reacts, comes back in, and closes bearish. On the 30-second, you would notice that actually means that price is likely going to draw lower. But when we target, we have to keep into account that price is still bullish on the hourly and the 15. Therefore, you cannot just put your take profits where you want them. You have to put them somewhere strategic, right? Like what, for example? Key price areas, 15-minute order block. Makes sense? What is that for us? That is right here. This is our 15-minute order block. So first take profit at the 15-minute order block, then the 15-minute low, then the hourly order block, then the 4-hour low. That's it. Nothing complicated. In doing so, you'll be able to catch these really high risk reward trades. But my safe entry model here, had I been taking that, which technically I was considering re-entering, but I just didn't because I had already won for the day and I didn't want to put risk on, is you wait for a 15-minute structure break right here. We got that. And then you want to wait for a revisit of the order block or a premium price point, right? And what does that look like? Exactly right here. We revisit that 5-minute order block. And guess what happens coincidentally? We get the first 1-minute break of structure. I marked it out on this chart, I believe. 1 second. Weird. So not this chart, maybe this chart. Yep. So what do we get here? Coincidentally, we get the first 1-minute break. That simple. Look, we get this entire leg back into the order block that I had mentioned just now. and not a single 1 minute break of structure to the downside.